Perfect. 8 o'clock on the dot.
8 o'clock. Look, 8 o'clock on the dot. Come on, somebody. So good evening, everybody. I am excited for you all to be here. Get a notebook, get a pen, share with a friend because we have a guest tonight. I'm so excited. Let me tell you, we're doing this workshop because all of y'all keep saying, how do I get money? How do I get money? Who do I get money from? I need business credit. I need business funding. So, guys, I'm super excited. Tonight we have a guest. Somebody, let me make sure I can see this. Tonight we have a guest. So, guys, in the comments, when you get a chance, let me know if you can hear me. Let me know if you can see us okay, right? And so, Rok Financial has been just a huge partner and a huge blessing to so many of our wealth warriors. They have funded so many of the entrepreneurs. But more importantly, the one thing that I really like about Rok Financial is that they educate. They spend time, whether you use them or not, like they spend time educating about FinTech financing, about business credit, about what you need to qualify. And more importantly, sometimes there's even people who qualify. Hey, Arthur, can you hear and see us okay? If you qualify, let's say you get denied, about having a real conversation about, hey, fix this, this, and this. And then sometimes you can come back and reapply. And so I'm not going to talk your ears off. I gave y'all a couple of seconds. Go get your notebook and go get your pen. Okay, this is going to be a real workshop. Okay, perfect. But Tony, can you just first introduce yourself to the people? Let them know what you do, a little bit about your background.
Yeah, no, Terry, and first things first, thank you so much for having me on. Guys, it's great to be on with you this evening or this afternoon, depending on where you're calling in from. First things first, I appreciate you rocking out with us more than you know. And Terry, thank you so much for having me on. Like Terry mentioned, I don't know if you guys have ever seen the show on the History Channel, The Mythbusters, but this is version 2. Terry and I are here to tear back the curtains and kind of show you guys what it takes to get access to business funding in August of 2025, right? Because one thing that I can tell you is in 6 months, rates, terms, requirements, all that stuff changes. So we're going to take a snapshot for you guys this evening on exactly what it means and exactly what it's going to take for you to get business funding in 2025, which is it's readily available. There's a lot of it. A lot of people are giving it out. I would say that actually is worse than trying to find it when it's not readily available, because everybody's trying to hand it to you, but nobody wants to talk about, is this the right type of financing? Are you the right lender or bank for me? Because realistically, when you take, what kind of financing you take is the most important thing, right? So, Ryan, we're zooming out, dude. I don't know what happened there. Let's see if I can figure that out. Hang on.
I love it. You said one more time. Hey, Mary. And so let me just say this. I'm going to pull this up on the screen. One thing that Tony said already, and I hope y'all are catching these nuggets, y'all. Share this with a friend because we're going to dig deep. That's but right. One thing that Tony said is that financing in August of 2025, guys, one thing I want you guys to all know, we're about financial literacy, that it's very, very fluid. What is available today and the requirements that are available right now are very different than before COVID, very different than what they'll be in 6 months or so. This is one reason why we're doing this workshop today. And let me just share with you guys one thing. I want to talk to you about Rok Financial and what we're going to do today. So we're going to talk about what a FinTech lender is. We're going to discuss and Tony's going to share, what type of funding is available. Guys, this is huge because everybody thinks it is just a business line of credit. They have no idea about loans, about working capital, about equipment financing. We're going to talk about, Tony's going to share the process, what you need to qualify, and then how you can get started right now.
For sure.
And one of the reasons why we're doing this, and this is for everybody, if you can relate to this, put yes in the comments. 95%. Look, how many 95% of businesses fail within the first 5 years? And one of the biggest reasons is because of lack of access to capital. So guys, this workshop tonight is intended to educate you so you do not fall into that statistic. And the only other thing that I want to share with you is that you do not have to be, look, Arthur said, yes, look, come on, somebody, is that you do not have to be a fully self-employed entrepreneur. Look, Tony, am I telling the truth real quick, right? Like
100%.
Yeah, like you can have a full-time job and still have a business that you're building and qualify for financing. And so that's one of the things that is super important. So let me go ahead. Let me add. Hold on. There you go.
That's me. If I'm being honest, Terry. Like, I'm I'm an employee of Rok Financial. You know, I'm our VP of business development. I make sure that we have business to work on. But you know, I'm a hustler. Cassidy taught me that one, you know.
I love it.
Cassidy taught me that, you know. I got a chance to grow up on that. So, you know, I know that, you know, there's a lot of people like me, and I forget what the exact statistic is, but like something like 30 or 60% of the Gen X, millennial, even Gen Z workforce have full-time jobs, but also have additional income, whether they're even driving, you know, DoorDash or Uber, right? Like everybody's out there trying to get after it. If you're trying to do that in 2025, one of the best ways you can is build a business, because financial freedom is not going to come easy, and you got to take it. Right. So nobody's going to hand it to you. You know, I saw something recently, you know, the guy who founded Microsoft with Bill Gates, I forget his name. He's the number 2 there, but he's like one of the richest people in the world. And he's the first employee to be in the top 10 richest people in the world. Right. Well, why do you think that is? Because employees are never the richest people. Right. Now, I'm not saying you can't be an employee and have something going on. That should be the motivation. But, you know, small steps make, you know, fast movement. Right. So
I love it.
That's the goal, right? Is we're going to take the right steps in the right direction. And Terry is awesome. For you guys that don't know, you know, you should definitely be locking in with the Wealth Warriors and getting on as many different things that she can provide as possible. We're here to talk funding and exactly what that means. So really quick, I'll give you guys a quick background on Rok Financial.
Yes, please.
That will lead us into our first topic of what is FinTech, right? So Rok Financial, we're a commercial financing broker. What that means is we offer all different types of funding. There is a lot of different things out there. We'll go into the programs like Terry mentioned, but there's a lot out there. And when you're a business owner, it's important that you know, like I was saying before, that you're taking the right type of funding at the right time. So we are that resource in your corner. A lot of times, if you were a big business or you were a Fortune 500 company, you'd have a team of people under a CFO that was going to help you make this decision, right? It would go to the board and they would talk about it for 3 months before they decided what they were going to do, right? Well, we don't have that, right? And a lot of times our opportunities come and go as business owners, right? Hey, it's here today and gone tomorrow, right? Because they'll go sell that piece of equipment to somebody else, or they'll give that job to somebody else, or I'll miss it because they sold it to somebody else, right? So, you know, couple things as we get going here. First thing I'll tell you is fast money ain't cheap and cheap money ain't fast.
Oh, say it again, Tony. He is, guys, Tony, in case he didn't say it, he is the VP. This is like he is the VP of business development. Say it again, Tony, for the people in the back.
No, you're right. This is one of my favorite lessons that I learned early is fast money ain't cheap and cheap money ain't fast. Right. You know, so if you want to get access to the best funding out there, just know it's going to take a little bit. It's not one of those things that you're going to have money in your account tomorrow, and you can have money in your account tomorrow. It just comes at a premium. Right. So what we always look at is, does the cost of capital outweigh the cost of what we're trying to do? And if so, then the money doesn't make sense. Right. Dollars have to make sense. So I'm here to kind of break down the stereotypes that like all money is bad, that's expensive. Like I promise you, there are thousands, tens of thousands of business owners that take advantage of this stuff every single day. And you can be one of those business owners as long as you have the right information. So that's what we're here to do. We're here to give you the right information. And just to get started, right? Like the FinTech thing, it's a big push from a lot of different angles. Some of the biggest companies in the world are calling themselves FinTech companies these days. What does that actually mean? It's just financial technology, right? It's where you take some sort of financial service in and around business or even in and around personal finance, and you add technology to it to speed it up, right?
So good.
Think like banking apps, right? That's the bank's world of kind of getting into FinTech, right? But because of technology, there has been a explosion of variety of different resources that have been provided back to business owners due to technology. And I'll give you one that you've probably watched change in the last 5 to 10 years, and that's Square payments, right? I remember the first time I went to my barber and he was like, "Hey, I take credit card now." I was like, "What? You don't just want cash? Like, I don't have anymore." Like, I'm not that old school, but trust me, I remember. I'm old enough that I remember being a kid and people writing checks at the grocery store for
I
their
know that's right.
every week, right? So like I remember that. Like there might not be a group of people that do, but I certainly do. And you know,
Yep.
coming into this industry, I've watched it explode over the last 10 to 15 years. You know, we
That's
have
good.
seen DocuSign get involved, right? Where things move extremely quickly because you can sign applications faster, which
Yeah.
creates a seamless process on the back end for banks and lenders, right? So as technology has poured into this industry, there have been really, really cool things that have happened. And one of the
That's
coolest
good.
things, if I'm being honest, is
Yep.
competition, which is great for business owners. It's good for business,
There
right?
you go. Yeah.
You ever drive by those four corners that have four different gas stations on it? The one that's the cheapest always has the most people at it. You know,
The same thing. Yep. 1,000%.
the same thing in business finance. If you only drove past one lender, well, that's all that they got, right? That's all that they can provide. But if there's
Yeah.
competition and there's multiple lenders that are doing these things, well, that will help everybody, right? So what we've seen is there's been this line drawn in the sand, and
Yeah.
that line is between traditional finance and alternative finance.
That's
Right
good.
now, both traditional finance and alternative finance have gotten into fintech. So I'm not trying to confuse you. Why does this thing keep doing it? I think it's because of my.
I think it looks kind of cool actually. So y'all see Tony running away from us. Come back, Tony. We was doing good.
A little zoomed out, I guess. I don't know. We'll
I love it.
new setup, so we're working with it, but I'm going the wrong way now. Apparently, I don't know.
That's good. Well, actually, let me interject one thing right here, because for everybody who's watching, this is a business funding workshop. I want to make sure that we're pulling out everything that Tony is covering, so you guys are not missing any nuggets. So the first nugget is that there's a huge difference between fintech financing and traditional financing. And one of the things that Tony said, and I want to make sure you guys didn't miss it, is the speed and what they finance. And if I can just give a real life example right now, right quick, I have one of our wealth warriors right now who was in the process of trying to get a business line of credit from a traditional bank. She had to make the appointment with the business banker. They had to go through all of her stuff. She had to fill out all the paperwork. We're looking at 30 to 60 days to even see if by the time they review everything, to even get approved. We also have another wealth warrior who came to Rok Financial and needed some financing, and she got $170,000 approved and in her bank account within 24 hours. 24. Matter of fact, let me see if I can. I'm gonna see if I can play this. Let me see. Can y'all hear that?
The next day, I went through the app. I contacted them. I was referred by you. We actually got approved for $255,000, and I didn't need that much, so we only used the $175. And it literally did come the next day, like 24 hours.
Come on, somebody.
So you better go ahead.
Listen, and so wait, where did Tony go? Wait, there you go. Oh, there we go. I kicked you off. Okay.
I think
so,
they hear me though.
Yeah, can you guys still hear both of us? And so, guys, I want you guys to realize that one of the things, so does sometimes the financing from a fintech company cost, is there a cost to do business? 1,000%. But when you need that money right away, you know, this is something that a traditional lender, it was not able to do. So can you kind of talk about real quick, Tony, the difference between the speed and financing with a fintech company? And also you said something else, that you represent multiple lenders and traditional. So can you review those two things for them real quick?
Yeah, absolutely. And I'm actually going to work backwards because you set it up perfectly. Right? When you go to your bank, you're really only working with Chase, right?
Yeah.
Or you're only working with Wells Fargo or your local credit union, right? But you're only working with them, right? And we want to get to a point where, you know, you can weigh multiple options, right? And the easiest way to do that is through what we refer to as like a marketplace, like we are, right? Yeah. So essentially what we do is we pair borrower with bank, right? That's what we do. We take you and your business and the requirements that it meets, and then we go to the best lenders that are there to do that. I hate this thing. This is getting annoying.
No worries.
Got to be the talking with the hands. I'm going to try to keep my hands down, but you know me, Terry. I can't help myself.
No, that's probably what it's doing. It probably has AI and it's picking up on your hand moving and is following you.
Yep. That's exactly what it is. It's smarter than I am, apparently. But no, the first thing. Look, me. I'm already trying to talk my hands. the first thing that I would say is it's definitely going to be one of those things where you're only going to want to apply with the best lenders for your business, right? So that's what we do. We take that part of the process out for you. And then, like Terry mentioned, we move extremely quick, right? What I say is we move at the pace of the borrower. And you just heard it directly from somebody who took money from us. And I did not even know that Terry was going to drop that. That's if you guys saw me, I was smiling from ear to ear because, you know, it's tough to always prove that, right? It's not easy to for things like that to be shown. So thank you for that, Terry. And I know Terry's even going to highlight this later on, but like, you want to work with a reputable business, right? You want to work with a reputable lender. It's not easy to find. But I can tell you the lenders and banks that we work with have a reputation, and that's why they get business from Rok Financial, because we see thousands of applications a month, and we wouldn't work with somebody that doesn't have the ability to do what they say and say what they do, right? So we vetted our lenders and banks that we work with. You don't have to worry about that. You know, we're the ones that are doing that heavy lifting for you. And then ultimately, the service that we provide is that speed, knowledge, and process for you. Right. So you can get money in as little as 24 to 48 hours. You heard that already. Up to 250 grand in 24 hours, up to 5 million inside of 5 days if you need it.
I hope y'all, did y'all hear that right now? Up to listen. And let me just say one of the things. So as you guys are following along, and I hope that you have your pen and your paper, some of the things, the other things that Tony highlighted that we talked about is you also do not have to be a fully self-employed entrepreneur. So if you have a full-time job and you're looking for funding and your business is technically your side hustle, you can still qualify. Now we have a question right here from Regina. And this question I know that you're really, really good at, because we're going to talk about what even like a startup is, but I'll let you go. So Regina says, no, is this good for startups? And Regina, great question, guys. This is interactive, right? This time is for you. And so if you have questions, say, first of all, like this, share this, and say hi and talk to us, okay? But if you have questions, but can you even define, because what a startup is a very loose term. So, go ahead, Tony.
I call it a trick question. You've heard me answer this one before.
Yes.
I call it a trick question because if you talk about startup you're on an episode of Shark Tank, you could be in business for 10 years, make millions of dollars in your business, and they're going to call you a startup, right? At the local bank, if you have less than 3 years time in business or 2 profitable tax returns, right? And pretty much no business claims profitability in the first year. So that's why I said 3 years. You need at least 2 profitable tax returns, and then they will view you as an existing business. But up until you have 2 profitable tax returns, you're a startup for a bank. At Rok Financial, we view a startup much differently. The way that we measure it is how long have you been generating revenue into a business checking account, right? And when I say revenue, I don't mean that we're transferring our personal funds into the business checking account to try to show revenue, right? I know that there's a lot of plays that people running out there.
Oh gosh, they're killing me.
Like they're making people like us look bad. Like, if I'm being honest, I see a lot like the word fraud and fraudster has made it into the influencer now, and I'm kind of glad, if I'm being honest. But some
people it needed to be said, because there's people out here doing it the right way and they're listening to people. We're gonna be real quick. Tony's dropping some game, and mind you, if you guys follow me, you know I only work with certain companies, and because Rok Financial is such a trusted lender in this FinTech space, they only work with certain people, right? And so you never hear me say, run this play. That's a red flag. You hear somebody say, run this play, y'all need to be looking at them with a side eye anyway, because the people who really are doing it the right way get bad information. They switch their process, and now they can't get access to capital because they listen to somebody running a play on YouTube. Come on, somebody.
Because they saw somebody talk about Navy Fed, right?
Child.
We're not going to go there. We're not going to go there. We're going to talk about the good things, right? Because there's too much information to share. But just know we are in the era of news. We are in the era of fraud, right? So like, measure twice, cut once was a great analogy I heard one time, right? And you should do that in any portion of your business. And if you're a business owner, you know that already. Your job is to make decisions for the business. We don't make decisions for your business at Rok Financial. What we do is we make sure that the decision you make about financing is well informed. So just to get back to the startup. We view a startup as a business that has less than 3 months of revenue into a business checking account, right? So if you have more than $5,000 per month going into a business checking account for 3 consecutive months, you're no longer a startup to Rok Financial, right? And again, it's got to be business revenue. We call it organic revenue. It can't be like transfers from your personal account or this or that. Like, I would love if it could. Trust me, it would make my application look much better in some of these things, right? But again, we're not running the play. We're here to give you the real info.
That's good.
So, a startup, it's tough, right? The first thing I always tell you is, nobody wants to give money to somebody when it's their first time doing anything, right? It's tough. It's why you have first time home buyer things. It's why you have different rates for your car when you buy your first car, right? Like, there's a first time, car buyer, first time home buyer. The first business that you run, they're judging you with the most critical eye, if I'm being honest. And if you look at a bank and the way that banks make money, they don't make money lending to small businesses, right? That's what people think. They think that interest rates are meant for you to make money, and that's not the case. The interest rate is there because it offsets defaults, right? When people don't make it, that statistic Terry showed of 95% of businesses not making it out of their first 5 years. Well, if somebody lent those businesses money, they're out of luck.
Yeah.
Right? So startup funding looks like this. If you are a business and you're starting up and you need equipment, right now, day one, you can get equipment financing for your business. It can be day zero, right? You don't need it to be day one. It can be day zero, right? If you're getting into the restaurant business, well, you ain't doing that without oven and stovetop and fryers and refrigerators, maybe even some glass casing, right? If you're in transportation, you're not towing any trucks without a tow truck. Right. You're not towing anything without a tow truck. Right. So, you're going to need essential equipment, right? Yellow iron in the construction industry, right? You want a backhoe or an excavator or something like that. Right. If you're getting started, the thing with equipment is they're going to base it on the value of the equipment just as much as they're going to base it on you and your profile. It's a little bit more credit driven. So we typically, if you are a startup, we're looking for a 650 plus credit score on that. Right. And you do need to be able to put somewhere between 20 and 30% down. Right. So I'll say that again. If you're a true startup, meaning under 3 months of business revenue, well, then you need 20 to 30% down payment, and you can get access to equipment financing for that business.
That's good.
There are some products out there. We don't offer any of these products right now because there are some personal lines of credit that you can find that will allow you to use them towards business. And I know Terry does a great job of going through business credit building, which is my biggest thing for a new business, is start to build your business credit right. And
did y'all hear what he said? Start to build your business credit right. Y'all better stop playing with us.
Yeah, exactly. Because if you do it right the first time, then you're taking advantage of things, right? There is the SBA, right? Like the SBA gives out some money, but I was actually talking with a gentleman earlier today. He works for a Fortune 500 publicly traded company. They're a very, very large accounting software company. There's only a few of them, so I'm sure you could figure it out if you do a little Google search. But I was talking to a gentleman that works in partnerships at one of these really, really big, fancy companies. Rok Financial, we are technically still a small business. We have about 100 employees, but we are still a small business, right? So when I talk to a corporate company, it's a little different, They usually don't have a hat on like me, and
No, we're family over here, okay? Listen, we're talking to our people, right? Are y'all our people? Say yes if y'all are our people. I love it.
Exactly. So, I'm talking to this gentleman, and it's actually the first conversation that we had a chance to have, and we start talking about the SBA. And he's decently educated in lending because of the accounting software that they provide. All of their competitors offer funding, right? So he's aware of the types of funding that are out there, and he knows that a business can go get an SBA as a startup. But what they don't tell you about the SBA is even if you go take 10 grand from the SBA, right? Because the SBA will lend as little as $10,000. The SBA files what's called a UCC1.
Talk about it.
I'm not trying to get too in the weeds here, but what a UCC1 does is it basically says nobody else can lend to you until we're paid off. Now, it's not that they can't lend to you, but the SBA owns the first right to any assets that you have, anything that the business owns, any money the business makes. It's called a blanket lien for a reason.
Blanket lien. Did y'all hear that? All right, go ahead. I'm sorry. Go ahead, Tony.
You're good. It's the best way that I could describe it is it's like a mortgage on your house.
Yeah.
Right. Like it's very, very similar. Now, the SBA does it because they give out cheap rates and long terms. So they want to know that they're protected to get back. So if you want cheap rates and long terms and startup SBA funding, we do a little bit of that. It's just not easy to qualify for. You got to have 700 plus credit. You got to have experience. You got to be in an SBA approved industry. They want to know what blood type your firstborn is. And
he's telling the truth too. And so y'all,
that's out there, right? So like, I know a lot of people that are in the startup phase, they might not have all the documentation right. They might not have everything that they need. So like, I know you might hear good rates and long terms and you're like, that's what I want, right? Like me too. Yeah. Me too. You're not talking to somebody that doesn't want that, but I'm also a realist, so I know that I can leverage other people's money where it makes sense, right?
That's good.
And all those dollars make sense. We're all about it. Now, I know I've mentioned expensive. I know I've mentioned cheap. I know I mentioned bank. I mentioned this. I mentioned that. Just know all money is expensive right now in the historical way that things look, right? If you look at interest rates, and that's why you heard this topic, I know we're not going to get political, right? But, just like COVID, Terry mentioned earlier, like prior to COVID, things were different. Well, prior to this presidency, things were different. And I can tell you, I've been in enough presidential cycles in this industry. The next one is going to change things too.
Look, guys, do we have permission to be honest with y'all today about funding? Because this is if we have permission to be honest with you today about business funding, so you guys can know what you need to qualify. Put yes in the comments, right? Because we're going to we're letting you know all the things that even impact the rates and the kind of funding available, but we're still going to share how you qualify. So go ahead. We have permission to be honest. Put yes in the comments. Go ahead, Tony. So
it's a great point, right? Like what I can tell you is like I have seen a lot of decline in solar in the last 9 months or so, right? 10 months, 12 months, whatever it's been. I know if you go on one of these websites, they'll tell you how many days, right? Like I don't keep up that close. I can promise you. I'm paying attention because I need to know what's going on where. But at the same time, like I don't read too deep into the headlines. I'm not one of those people, right? But what I will say is like I've noticed a decline in solar, in renewable energy, but oil and gas and transportation have made a comeback. Meanwhile, for the last 3 years, transportation's been getting decimated because of all of these auto driving, self-driving, this, that. It's been getting destroyed. But now it's starting to make a run again. The manufacturing industry here in the US is coming back. I'm telling you right now, we are at the front line. We know everybody in the manufacturing industry is doubling down. They're figuring out a way to go get their products a little bit cheaper from somewhere that's not tariffed, right? Like, if we're at a riff with China, they're getting them from here. If they're not in, so I promise you, they're figuring it out and they're also doing more. And like we see it because their approval sizes are going up and the amount of money that they keep in their accounts are going up. All the averages are up for things like this. So, this is the insight that we provide. And this is why I love that Terry has us on from time to time, because these are the conversations that we have. This is August 2025 knowledge. This will be dated in 6 months from now, and we'll have some new things to talk about. But this is the realness, guys. If you're in one of these industries, we could talk about your exact thing. If you want to highlight an industry or have a question about that, put that in the chat, the comments, we'll get to all of that. But I know Terry's got some slides, so I'm going to let her talk.
No, I love that. And thank you so much. So the thing that I want you guys to take away, because as this is the workshop and we're having a conversation, you guys said we have permission to be honest. I want to make sure that we're having a conversation and that you guys are also pulling out everything that Tony is saying. What he basically said to you in the snapshot is that business funding is influenced by what's going on in our economy, in our politics and tariffs and everything else. So and you guys, if you see across the screen, we have a phone number listed. We also have in the pinned comments the link to apply online with them, because their process, and we'll talk about their process, is that you can have a conversation so they can talk to you about what your options are, because something that you may have tried to do 3 months ago or 6 months ago that may have been a no, may be a yes right now. Something might be a no right now, and they may be able to give you the actual feedback. And so the biggest thing is that it's fluid. Financial products change, the qualifications change, and the rates change. This is why you always want to be connected to a good lender like someone like Rok Financial that stays in the forefront of what's going on. And they represent more than one institution, right? So you guys see right here, right? Small business funding. I wanted you guys to see. Something else I wanted you guys to see is that they have so many different types of funding, right? And we're going to talk about that in a second. But for everybody, first of all, let me shout real quick. We got Joyce in here, Carl in here, Mary in here. Let me see. Crystal, I see y'all, Wealth Warriors. Catherine, Dolores, Regina, Arthur, Jocelyn. Hey, look, if you're a Wealth Warrior, say hey, y'all. All Wealth Warriors. And I have to actually thank Tony, too, and Rok Financial. They were partners for our Wealth and Warrior Mastermind that we just came back. Jocelyn was there. Keisha was there. That helped actually provide funding to some of the actual entrepreneurs that were at that event. Actually, Lisa, who we just did the slide, she was actually at Wealth on Water. Okay, so come on, somebody. But one of the things I want you guys to see, because all FinTech lenders and all these lenders online are not created equal. I'm just being honest. And because of the space that I'm in, I get people that reach out to me all the time to work with us. And I actually do not work with, oh, look, here you go, Allison. Hey, Rok Financial is the truth. Come on, somebody. Arthur, look, we see the people that were at Wealth on Water. Hey, Wealth Warriors. So what I wanted you guys to see is one way that you guys can vet when you guys are seeing FinTech companies. And I'm showing you the Rok Financial, somebody we already work with, is I actually look and see, are they on Trustpilot? I look and see if they have reviews. I look and see if they are AAA rate, if they have a rating with the Better Business Bureau. And so these are some of the things that I look at when I'm even partnering. That's why I don't highlight everybody. For you out there watching this, as you're vetting, look on their websites and see, how long they've been in business, who else they've worked with, because that will let you know that they're a reputable lender. And let me go back real quick, because we touched on this for a second. But for everybody who knows me, hey, y'all, hey. And for the people that don't know me, I'm a business coach first, right? I only started my YouTube channel. Tony knows I only started my YouTube channel back in 2020 part-time as a free resource for the community during COVID. I had no idea it was going to grow like this. But the reason why I'm sharing this is I'm not a content creator. I'm not even really an influencer. I'm a business coach first, and now I share information via YouTube. But I have over 20 years of experience and used to work for TransUnion. This is one of the reasons why I teach a little bit differently. So for those of you guys that don't know, hey, Mary, for those of you that don't know me, I want you guys to know that there's how many years of experience between me and you? I got 20 years. How many years you got, Tony? I think you got 20 years too, right?
Yeah, I'm catching up.
40-some years worth of experience right here, okay? Now I can't see this slide real well, but Tony, can you go over? So there's SBA financing, working capital. So Tony,
I'm going to put it in two buckets for us, because it's easier to just do it that way, and we can talk about what's inside of each bucket individually, right? The easiest way for you guys to think of things, kind of like traditional and alternative lending, like we were talking about, traditional lenders and FinTech lenders, right? There's kind of two lanes there. Well, in lending, whether you're talking about traditional or alternative, they look at lending from two different scopes. It's going to push me away because I'm using my hands again, so I'm going to stop.
No worries.
There's two different types of lending, right? We have what's called secured lending, or like asset-based, meaning that some thing that the business owns is being held against whatever you're borrowing, right? So think real estate. You want to purchase or refinance real estate, commercial property, or you occupy, your building, and you want to buy a building, or you want to buy an investment building, right? Commercial real estate is one type of asset, right? A second type of asset is equipment, right? Equipment is technically asset-based lending, because if you lend on one specific piece of equipment, well, that's an asset that the business can own, right? The same thing with accounts receivable. If you want to just jump back to that one quick.
Yeah, absolutely.
Accounts receivable financing. This is probably one of the best kept secrets that's out there, right? A lot of people don't know that their receivables are actually an asset, right? I remember being in college and learning the accounting equation, right? You got your assets and liabilities equal what the owners own in the business, right? So a receivable is an asset because it's money that's owed to you for work that's already been done, right? So I'm not talking to you if you own a pizza place, unfortunately. And the reason that I say that is because you can't go into a pizza place, go get your pizza and pay in 30 days.
That
Right?
would be cool. Somebody should start that business.
Fantastic. Trust me. Except I'd run that bill up. That's the play that I'd run, unfortunately.
Absolutely.
Running the play at Domino's. I unfortunate. Me and the lava cakes. But no, the asset based or even when we get into a specific product like accounts receivable financing, it's for B2B businesses, because when you are a business that does business with other businesses, not to say that word too many times in one sentence, but you know what I'm talking about. You are
Right.
B2B. Your customers are other businesses. You're a marketing company. You're not working with individuals. You're working with another business. You are a commercial builder. You build buildings. You put foundations in for buildings, not residential, right? Commercial. If you are you are a manufacturer and you sell to dealers and resellers and sellers, right? Your widgets go to sellers. You're selling to businesses, right?
Yeah.
So if you have businesses that do business with other businesses, they don't get paid on demand. They don't get to hold the product till they get paid, right? Like the pizza place. You hand them the cash, they take your cash, they put it in the register, they hand you the pizza, right? In business to business, you get your product first. Then in 30 days, you come back. 60 days, you come back. 90 days, you come back and you pay that off. That's the way that works, right? And there's a lot of people out there that deliver for Amazon or Walmart or are doing staffing for doctors and dentists and hospitals, right? Or any type of staffing, right? Like, manufacturing, any type of manufacturing. Like, most manufacturers don't sell right to consumers. A lot of them, they sell through resellers, so when they're doing that, them selling to the reseller is what we're able to finance, because there is a cash flow gap, right? Let me paint a picture for you. You make t-shirts, right? T-shirts are not you put your logo on them, you gotta print on them, whatever it is, maybe it's embroidered, right? Either one, but you make t-shirts, right? So you're gonna go sell your t-shirts, you want to sell 10,000 of them to Walmart, right? Well, guess what? You need all the material to make 10,000 t-shirts.
Come on.
Your staff to make 10,000 t-shirts, and then you need to pay your staff for the next 3 months while Walmart waits to pay you off. Right? Because that's how that works. So if you had to finance all of that yourself, essentially that's what you're doing. If you're just using your own cash, is you're financing it yourself. It's going to be expensive. Now, what if Target calls 3/4 of the way through that project and they're like, hey, we want 10,000 of those as well? Do you have cash on hand to do that? Right. So what accounts receivable financing does is when you issue that invoice, meaning you've completed the work, you can use that invoice as an asset and go get up to 80% of that value day one. And then the way that it works is it's typically like 1 to 2, maybe 3% a month. Right. So if it takes you 2 months or 3 months, it could be 6-9%, right? For your customer to pay that invoice. Right. The beauty of accounts receivable financing. And you want the influencer talk. Here's the hot button item. If Terry was going to put this on as like an individual video, this is what I would tell her to use as the title. It's the no payment business line of credit.
Oh, come on, somebody. Hold on. Let me put you on the screen. Say it again, Tony.
You don't want that. The no payment business line of credit, right? That's the most clickbait thing you could imagine.
I love it.
I'm gonna get millions of dollars in my business and I'm not gonna have to pay anybody. Right? That's essentially what it is, though, because your invoice is paid by your borrower. Here it goes again.
So let me. So the example that Tony gave. So we're going to highlight a couple. So they have a bunch of different financing. I'm going to highlight. I put a couple on the screen because we can't go over all of them tonight. But I'm giving you their phone number and their website to actually go to them directly. But franchise financing, working capital, the accounts receivable. But this is the reason why I put accounts receivable here is because it's one of the financing that many of you actually qualify for. If you think about the kind of business you have, and most people don't talk about it. I see it a lot with my home healthcare companies where they do home healthcare. I need y'all to hear me. We're giving you real examples because some of you guys haven't even thought about your business like this. They are a home healthcare company. They're getting paid from the insurance company. Well, I know 7-figure home healthcare companies that have been strapped for cash because the insurance company pays them net 30, 60, 90. So sometimes that business owner has to float their payroll. Try having to come up with $300,000 worth of payroll, and you're not going to get your invoice paid for 90 days. The business owner takes it on. I also see it a lot. Am I telling the truth, Tony? I also see a lot with construction companies
100%.
where they're like where the construction company owner is doing all this work and they're invoicing the corporation for fences, for pavement, for windows, whatever, and the corporation is not going to pay them for like 60, 90, sometimes even longer, and then don't let them be a slow pay, guys. Business owners, this is why we're doing this. And I mean this, y'all. Business owners who are intelligent, who are successful, who are cash flowing, who've done the right thing, and literally are strapped for money and need $100,000, $200,000, $300,000 because of the way the funding is worked and because the way their payment structure is worked. That's where somebody like Rok Financial literally has saved businesses by being able to fund quickly based on something like accounts receivable. Guys, put yes in the comments if you just learned something just now.
No,
go ahead, Tony.
You're totally right. And I got a quick example for you guys. I'm going to kick it back to a couple years ago. It was right like mid-COVID. I'm going to try to ask you guys to remember. Gas prices started going extremely high. Right. I'm talking about like it was like June and July, but basically in those 2 months they had soared so much. And depending on where you were in the country, it could have been 2-3 times what it was the month or two prior. Right. We had a gentleman who was a towing company. He was on the border of California. And I believe it's Oregon that's right above it. I think it was Oregon and California, but he was right on the northern border of California. He was doing business in both states. Basically, he had 6 trucks, right? Wow. And he obviously had employees. You're not an owner operator when you got 6 trucks, right? So he had some employees, so he was paying payroll like Terry was talking about.
Yep.
And all of a sudden this cost that is a necessary cost, right? Fuel, tow truck matters, right? Becomes 2 times, 3 times what it was.
Come on.
Right? So he literally drained the cash that he had made in the business that year after investing in 2 new trucks to start the year, right? He drained all the cash that he had spent on the gas for those 2 months and was not going to be able to make payroll. He was a West Coast gentleman. He called us on Thursday. He needed the money by Friday. Otherwise, he was not going to have a company on Monday. And just like Terry's Wealth Warrior that showed you guys we can get capital that quickly, he literally, cost did not matter. And I'll tell you right now, he didn't pay all that much for it because he was able to pay it back pretty quickly. But cost didn't matter. It could have been 200% on the interest rate. But he wanted to keep his business running. So if we were able to help him float payroll for a few weeks, he was weathering a storm, right? Business owners, you guys know this. You might be cash strapped, but you're not broke. You're just broke right now.
That's a bar right there. He said you're not broke. You're just broke right now. We want to help you weather the storm. That's the video title. I love it.
Totally true, though. It's totally true.
It is.
You know what I'm talking about. It's not one of those things where you have any real control over it, right? The best thing that you can control is your emotions. The best thing that you can control is who you're working with and the resources you have access to. And if you're following Terry and you're keeping up with Rok Financial, you got the right people in your corner. And it doesn't have to be us, right? Like, yes, Terry and I definitely want it to be us. Trust me. But my point is like, just weigh your options, know who you're working with, and find people like us if it's not going to be us, but we're the most fun. So definitely.
We're the most fun. We're definitely the most. I love it. Thank you for sharing that story, guys. The stories, right? And maybe we have to even just, and my wealth warriors know I'm always open to feedback, but sometimes sharing these stories, why we're so passionate about education and business funding and business credit, guys, we're entrepreneurs. Like we have people in our family and our friends and stuff that are entrepreneurs. And so sometimes people don't even realize how you guys hear me always say, you'd rather have it and not need it than need it and not have it. We're talking about extreme situations where the speed in which you were able to get funded was a game changer for somebody who put their blood, sweat, and tears into building a brand. That's why we're doing this. And so it's so super important to know. And you guys hear me always say, the lender matters, the lender matters, the lender matters. It doesn't matter if that business owner had 800 credit scores. There was only a certain kind of lender that would have been able to fund that kind of amount that quickly in that kind of situation. Does that make sense? If that makes sense, put yes in the comments. Only other thing I want to say right here that I'm going to ask you, I'm going to go back to the equipment financing slide. If you can share with them some of the things. So I think people have a misconception when we talk about equipment financing, a lot of people think it only means like cars, or only means like restaurant equipment. But the other thing I want to say real quick for Regina, who asked a question earlier, you guys always hear me say traditional banks, guys, 5 years and under, you're still considered new for most banks, for most traditional lenders. And that's why even that stat in the beginning, 95 of businesses go out of business the first 5 years. That's the reason why. Year 1 to year 5, like you're still a lot of times still growing, scaling, figuring it out. Rok Financial will fund you, like they'll fund you with way less. Like some banks will need you, require you to even be in business for 2 years before they'll even look at you. Yep. Where Rok Financial has provided solutions for people that have been incorporated for 6 months, have 6 months to a year worth of funding. So this workshop and me introducing you guys to trusted fintech lenders is about you being aware of your options and knowing where to go to get the funding.
No, I mean, Terry, you know this and I know this. We wouldn't even exist if everybody had the information we did. Right? Like we wouldn't have this going on. We wouldn't be live right now. There wouldn't be people commenting. There's a lack of information. And, I'm the first person to admit it. Like, when it comes down to it, we have the information because it's at our fingertips, which is why we love to share it, and that's why we're here. Equipment financing, I believe this is financing's best kept secret.
Look, come on, somebody, y'all get your notebook and pen.
Yeah, besides Rok, right? Besides Rok, and Terry, it's definitely like the thing that people know least about. Trust, maybe not trust the least, like, because everybody has their gripes here and there, but like it's definitely the one that gets the most overlooked, right? And it's interesting because right now Terry's on a webcam, I'm on a webcam, I have a microphone, Terry has a microphone. That's pieces of equipment. The cameras that we're using, the lights that we have, right? It's equipment. The computers that you guys are on, or the phones that you're on, even, right? Like it is also equipment. Now, what I would say about equipment financing is it does have to be business purpose equipment, right? So again, we're not running the play for you to go buy a new car, right? Again, that's not what.
No, you talking real, but I like the fact that you highlighted real quick. Did y'all hear what he said? YouTube is a part of my brand. Do y'all know how much money didn't I just joke about it? Tony, before we started? If I turn my camera around, I have no less, maybe I shouldn't say, but I have no less than like $50,000 worth of equipment in my studio. And I'm on my webcam right now, but I talk about cameras, my Roadster, my microphones, my ring lights, how many ring lights I have. I have 2 dual monitors right here. This is legitimate business expenses on my legitimate business account. Y'all, some of y'all podcasters have $10,000, $20,000, $30,000 worth of equipment. There's legitimate business expense that come on, somebody, you preaching right now.
No, absolutely. And there's no better time, if I'm being honest, right? We talked a little bit about how, like, different things that affect lending. And what I would tell you is everything affects lending. You want to prove me right? I promise you, go do something wrong and apply for funding. It doesn't matter what it is. Be in the wrong industry, fill out the wrong type of business formation. Like, I'm telling you, pick any single category, your state, your location, how long you've been in business, how much money you make. All of that matters. Your weather, the weather matters. The weather matters, right? If there's a disaster in your zone right now, that matters, right? So I'm not saying it matters exactly right now, but it does matter because it's nice, right? So it's not mattering, right? So when I tell you every single detail matters, equipment is a great example of that, because and again, I'm not trying to be political. I'm just telling you what facts have changed due to us having a new president, which happens every 4 years, right? Yeah. So, like, here's a new fact. This is a fact. Due to Trump's big, beautiful bill, the thing that was just all over the headlines. Again, we can clip this section and make it a short, and it'll probably go viral because we're talking about the topic that everybody's got comments about. But this is a true fact, right? Is in the big, beautiful bill, they extended and permanently added Section 179 to the tax code. Now, I'm going to talk outside of equipment financing for a second. I'm just talking about you buying equipment in your business. So Terry's equipment that she's talking about, the iMac computer that we're on, right? The TV that I'm looking at so I can see Terry and the presentation, right? In our business, that's necessary equipment, right? If you're a restaurant owner, it could be a food truck, right? You could be looking at a food truck as a restaurant owner. That could be a necessary piece of equipment, but it could also be the glass casing. It could also be the tables and chairs. It could also be the light fixtures and anything like that, right? It could be your walk-in freezer. It could be your walk-in freezer, right? It could be any of that stuff, right? So it's not just restaurant and trucks and trailers. It's literally any type of business purpose equipment. We have a company that works with us that does software for chiropractors. And basically they have a 2-year software license where basically if you purchase it, you get it for 2 years. It costs 40 grand. And we finance that for them over 2 years.
That's
right.
So
so at the end of your license, it might have cost you a couple $1,000s more, but you didn't have to pay $40,000 on the upfront, which is all they offered before working with Rok.
You better go ahead.
And we finance that through equipment financing, right? So what does that mean? If it's equipment in your business and it's necessary equipment, back to Section 179 for a second, which was phasing out, meaning that in this year, next year, and the year after, it was going to be gone. Right. But basically, because it's permanently added back in as of 2025, any purchases of equipment in your business now up from $1.25 million up to now 2.5 million. So let me just say it all at once because I know I'm talking kind of in circles. But now in your business, if you purchase up to $2.5 million in 2025 of equipment, you can write that off dollar for dollar in your taxes, right? I'm not going to sit here and tell you that I'm the tax pro, that you should use me for tax prep. I would say you should go talk to your CPA or your professional about it, because they might have strategies that are a little different that work better for your business and the particular scenario you're in. But let me run you through a quick example, and I promise this will all make sense. Right? You have $100,000 in your bank account. That's how much you've made so far this year in profit, right? You want to go buy a $50,000 piece of equipment. So you do so. You now have $50,000. But when you go to Uncle Sam, he's going to see that you made $100,000. Due to Section 179, Uncle Sam is going to let you write off all $50,000. That's whether you bought it or not. That's whether you used your cash or not. Now, let me show you the power of a loan. Right? Because when you take financing for this, right? Equipment financing, or even if you used a line of credit to buy it, like you can use cash loans to buy equipment too, but equipment financing is like specific to that piece of equipment, right? But if you take out equipment financing or any other type of financing, you now keep your $100 grand in the bank. Remember that? Okay. Right now you keep that. And you go get your $50,000 piece of equipment. So now at the end of the year, you tell Uncle Sam you made 50 grand, but how much do you have? You have 100K. And because you paid interest on a business loan, that's also tax deductible. So let's call it 20%. So you paid 10 grand in interest. So now it's going to cost you 60, right? So according to Uncle Sam, you made 40, but you got 100 and your piece of equipment. To me, that sounds like a win. Right. And this is when they talk about like other people's money to scale your business. This is the type of things that they're talking about. They're not talking about you doing it to go buy the G-Wagon. What I'm talking about you doing is doing what I just said to get your new oven or get your updated equipment, make more money in your business, and then go get the G-Wagon. That's my play. Right?
I love it. And I hope y'all, I know that he ran through like the numbers that he's talking about, y'all. This is wealth building talk. This is strategy talk. Like what we're sharing right here. I can't tell you, my wealth warriors don't. I talk about some of the 7 and 8 figure entrepreneurs I work with. And when you get to a certain bracket, and when you're running your business a certain way, and you start doing business taxes and so forth, which you should be doing at a certain point in your business, they also look about how much money. It's not just how much money you make, but how much money you can save. This is where you do get business owners who are like, hey, I'm using my cash. Let's say you have a daycare and you have to get equipment. Let's say you're a personal trainer and you have a whole bunch of equipment that you need to get. They're getting wise about not just using the liquid capital for that, but getting financing for that and keeping their own liquid. Like, guys, this is like he just gave some game right there for real. And so hold on, I saw Mr. 97 Mer said, peace, I just applied. Come on, somebody. I love it.
Let's rock. I love it.
So this is the one thing I want to say to you, everybody right here. And then Regina has a question for you, Tony, that there's a link in the comments and there's a number going across the bottom of the screen. The biggest takeaway, guys, is that we want you to be aware and be informed. If you are a business owner, entrepreneur, small business owner, if you have questions, and we didn't even get to real estate, we'll probably have to do a second one. Y'all let me know if you want us to do a second one, because they actually have some commercial financing, bridge loans, fix and flip. I didn't even get to that yet, y'all. Like, come on, somebody. But this is where any questions, guys, reach out to them and have a conversation about your specific situation. So Regina said, can equipment financing be used for a fire alarm system?
Absolutely, especially if you own the real estate, like, and that's something that you have to put in. 100%. That is definitely business purpose equipment, right? Like, there's no more business purpose than that, as far as I'm concerned. It's health and safety, right? So that is 1,000% available.
Part 2, come on.
Yeah, let's rock, baby.
I love it. Look, come on. If you learned something, come on, somebody. If y'all learned something, put yes. If you want a part 2, somebody put part 2 in the comments, because we can set up a part 2 where we can focus a little bit more on some of their real estate financing. And thank you so much for those examples. So can you go with one other thing I want you to talk about real quick? Is the franchise financing. So I've been having a lot more business owners, guys. There's so many opportunities out here. Mind you, all of these, I didn't even highlight a snapshot. Rok Financial has access to get you guys this. But can you talk to them a little bit about what franchise financing is and what they need to qualify? And then we'll kind of wrap it up and end with the process and next steps for everybody.
Perfect. So I will do my best to keep it short and sweet, which is not my forte. That is not my forte, which is part of why Terry and I get along so well. But no, franchise financing is exactly what it sounds like, right? It is for those that are in the franchise industry. Just recently, like literally in the last 45 days, we have funded Burger King's, McDonald's, Dunkin' Donuts, Jimmy John's.
Shut up. I want Rita's Wood Rice. Yo, Buck, we should buy Rita's Wood Rice. All right, I'm sorry. Go ahead.
No, you're right. That's exactly what it's about. If you're trying to buy a franchise, we can help you do that. If you have equipment in your franchise, so there's a pizza franchise. I'm drawing a blank on the name. It's not Domino's, which was the example I gave before, but
Papa John's. Look,
no, Marco's Pizza. This was years ago. It was one of like our first experiences in equipment financing, if I'm being honest. Basically, they had one entrepreneur or franchisee, as they're called in the franchise world, right? Meaning they own individual locations. They had one person that owned 115 at the time of like 500 or 600 total locations. So basically they had like 20 or 30% of the market share of all of Marco's Pizza was one business owner. And they had updated their system, their POS system, right? And they were using this new fancy thing. I'm talking right as mobile ordering came out, this was right before COVID. So think like 2018, 2019. I know I'm going back, but like Terry said, we've been doing this a long time. And long story short, what happened was there was like 3 different capital providers, right? Marco's Pizza had a relationship with a really big bank, and they thought that bank was going to be able to help their franchisees, because when they saw the increase in mobile ordering and online tracking with the pizza tracker like Domino's had, and they saw this one franchisee do it, they mandated it for all the other franchisees. Right? So people who own 20, 30, 50 franchises, for them, it's a little bit easier to come up with capital. They probably had a few $1 million laying around, but basically it was $25,000 a location to upgrade to this new POS system. We got to it, and when we got there, we were the 3rd capital provider. So it went from big bank to regional bank to Rok Financial. When we got involved, out of the other like 460 or 70 locations, 3 other locations had been funded by the banks. And their deadline for this was like 35 days away. So we get introduced through one of our affiliates who happened to be the banker that they used at the regional bank. And they were like, hey guys, this really just isn't like what we do. You should connect with Tony and the team at Rok. So we did that. And we basically said to them, hey guys, this is a form of franchise financing, yes, but there's a few different products that could help your franchisee.
That's good.
And what I don't want to do is just pin us to one type of funding, because if we do that, then what happens if they don't get approved? Right. So what we did was we looked at lines of credit, we looked at term loans, we looked at franchise financing, and we looked at equipment financing. And some of the people were able to qualify for equipment. Some were able to qualify for a term loan. Sometimes those requirements are a little higher if you're a restaurant, right? And especially if you're new and you only have one location, right? So what we also found was there was people that were like, yeah, I want $25,000, but I also want $25,000 to market, right? I want $25,000 to do this with, or I need an extra $50,000 to do that with. So we had people that took more money. Now, I'm not going to tell you we were able to fund everybody, and a good percentage of them were able to self-fund, right? So I think when we got to it, there was like 90 something locations left. We
Wow.
funded 28 of them. So I'm not going to tell you that we helped everybody because that's impossible, right? Nobody can help everybody, right? But what I can tell you is at that time, we're the best option for you. And at any time, we're the best option for you
But
because we're going to be able to do what nobody else can. And that's get you in front of multiple lenders like Terry was talking about.
you better tell y'all here, like they're from New York, y'all. And, I'm a Philly John. He's talking that talk. He said, I'm talking that. No, because we're joking. Is it okay if we have fun while we learn? And we're going to share a couple more things about next steps and close out. But one of the things I hope that you really took away from this story is that it's a different type of funding than the regional and traditional banks. And they have multiple options. I want you guys to understand, like, if you didn't miss what he said, there was franchise funding, but there was also equipment, and there was some term loans, there was some lines of credit. So sometimes, guys, and I want you all, as wealth warriors, we're doing this for real over here, right? As generational wealth, I want you guys to get your financial literacy up. So maybe it's I don't qualify for the line of credit, but I do qualify for the term loan. Maybe it's I don't qualify for the franchise financing, but I do qualify for the equipment financing. So there's different variables involved with the different kinds of financing. One of the blessings of working with somebody like Rok Financial is they're versed in all of them. So it gives you more opportunities to have a conversation. Now, I don't have my glasses on. He said, I am working on a brick and mortar business, very early startup phases. I know what equipment I will need, but I have not secured a space yet. Can I apply for equipment policy, qualify for financing?
I would say yes, you can, right? And yes, you can. Right. The short answer is yes. But if I'm giving you my best opinion, don't pay for equipment you're not using yet. You don't even know where you're going yet. So why are you going to take funding on equipment that's not ready to be put into a location? So my suggestion would be lock down your location and make the funding the last thing that you do, right? Because once you take it, you're going to have to pay for it. That's the nature of the beast. Like there are like with equipment, you can get a little bit of a delay. Like if there's, setup that has to happen.
Great question.
Or, like there's something like that, or, there's a longer delay for you to get the equipment. Maybe they'll delay like a payment or two, but like you're going to want to be making money with that equipment because you're going to have to pay for it. Right. So my suggestion would be go get the space, finalize that, I know that that's not the easiest portion. Right. But we're not going anywhere and neither is equipment financing. I can promise you.
I love it. So first of all, Jenna, thank you so much for being y'all. Sometimes you guys have and other things. Y'all need to be in our Patreon Wealth Warrior community because we do private workshops there every single month. But guys, thank you so much, Jennifer, asking that question because that helps other people. Now I want y'all. I have to be Philly for real quick. I want y'all to peep game. Did y'all hear how Tony just answered that? Because Tony could have just said, yes, get the financing. One thing I love with them is he said, well, you could, but what's a better decision setting you up for success is to lock down the location first. And then you'll know about what kind of financing what kind of equipment you'll need. And that's a better position. He could have just said, I would love to give you the money. But guys, if you guys understood, this is one reason why I work with Rok Financial. He gave you a better option, which means them not getting an application right now. He's not chasing an application. He's saying, I'd rather you have success, do this first, and then the next step after that is a little bit better because it will be thank you, Jenna. The thing that we don't think about is it's going to go into repayment right away. And he doesn't want you to default or be in a bad position right away. Thank you so much for answering that with just honesty, Tony. I really appreciate it.
Yeah, absolutely. And I appreciate you letting me answer it. It's a big thing. And, you always talk about financial literacy. So I'm going to give you guys a vocab word today. Well, it's a term. It's a key term, right? As they call it in marketing. But the key term that I want to throw out there, and this one hasn't been dropped by the influencers yet. So when you start hearing them use it, it was because they heard Terry and Tony drop it. Okay. Just know that. Right. But the term that I want to teach you guys is capital stack. And what does that mean? This is like a finance term. This is what they're looking at when the underwriter is looking at things, when credit committee's reviewing your business, right? They're looking at your capital stack. And what that means is, hey, I took out the right funding at the right time, right? Because that's all that matters. I know I talked about that UCC1 filing from an SBA, being a tough thing to get around. It is and it isn't. It's tough when you're trying to go do something else. Yes. But if you want to buy your building with good terms, well, one of the easiest ways to get there is through the SBA and utilizing their process because they have the lowest down payment, right? You only got to come out of your pocket 10% when usually commercial financing and business funding, you buy real estate, it's 20% out of your pocket, right? So the SBA says it's only got to be 10. So we like to start there, right? But if you're not like purchasing a building or doing something major in your business, maybe the SBA is not the best option, right? And that's where the capital stack comes in. We're not going to harm your capital stack, right? And that's a prime example of the way I just answered that question was because the salesperson in me is like, yeah, go ahead, apply. Let's see what we can do. Like I would love to get you money, right? Like that's my job. But the reality of the situation is I do want you to pay it back because I want you to the next time you go buy equipment, go, Terry, can you send me Tony's number? I didn't lock it in the first time. Like my bad on that. And she's going to let you know that you messed up by doing that. And, but no, that's the reality of the situation. Financing's not an if, it's a when. And when you think of financing, think of Rok. That's the main goal for me, if I'm being honest.
Yeah, that's good. Thank you guys so much. And so Jenna said, I'm going to have to sign up with Terry for some coaching to get my credit built. Thank you so much for the guidance. But thank you guys for being here, guys. Make sure if you've learned something, make sure you like this. Make sure you share this with somebody you want to see win. And Regina said that was helpful for me too. I have a space and I need equipment. Do y'all guys? We have to have more of these conversations, right? Because sharing some of the real life scenarios and even just taking your guys' real time questions, it helps so many other people. And yes, that capital stacking is real. And so the process, and I like this slide. I got this right off of their website, right off of Rok's website. You apply online, you review options, you get funding. Tony, can you just walk through some of the basic requirements and next steps and how people can apply?
Yeah. So absolutely. And again, thank you so much for having us on this evening. I know some of you guys might have to go. So if you do, that's all good. I promise you, Terry.
They don't gotta go nowhere. Stay right here. Let me stop playing with them.
I was just giving them a little opportunity if they needed to. But I promise you, we're going to get this thing wrapped up decently quickly here. But this is not a section you want to miss if you don't need to. So if you do, make sure you go watch it back. But this is probably the most important piece, right? The number one thing that we're going to provide is information. And I promise you are going to know why you qualified or didn't qualify for what you qualified for or didn't qualify for, right? Because we do offer so much, right? And if you are a pizza place, I can tell you right now, you're not going to qualify for accounts receivable financing because you're not business to business, right? So that's one small area where if you didn't know that, we would educate you on that, right? But down the entire list of products, once you do complete the application process, which for us is simply signing a DocuSign application and providing your last 3 to 6 months of bank statements. Once you do those things, look, now it's moving in.
We were good for a while, right?
Yeah, I was. My hands were down. But no, the once you hit that milestone of, okay, I'm able to send that information in, our system reviews your application automatically, reviews your bank statements automatically. It does a quick soft pull of your credit. And I say soft pull because it's not going to affect your credit score, but we do want to know what options are available to you so we can give those to you. So once you complete that application, instantly, like a snap of a finger, our CRM breaks down your business. It aggregates all the data, basically just pulls out what we need to see and where we need to see it. And then it spits back to you. I saw like Rok Technology or something like that was one of the slides. It spits back to you what we call the loan analysis. Right. So you're going to get a breakdown of all of Rok's products and how you could potentially qualify for those now, potentially qualify for them in the future, or potentially just don't qualify for them and why. Right. So it's a roadmap, right? Is what it becomes is, hey, this is what's available to me right now. This is what I can get access to in the future. And this is what just isn't made for my business. So I know a little bit more after applying. Even if you don't take funding from us, you still get that. Right. Even if you don't take funding from us, you are going to speak with an individual from our team that their whole role is built around assisting small businesses when it comes to getting funding. We call them business financing advisors. They are a true business advisor for financing. That's what they do. They work with underwriters and the credit committees at all the various banks and lenders. They have relationships, right? They're on first name bases. They're the friend in your corner. But I hear them say it all the time to each and every business owner they speak to. They don't work for underwriting and credit committee. They work for you and your business. And it's you and them against the underwriters. The best way that I could describe it is you are verbally going to paint a picture. They are physically going to paint a picture.
That's good.
Right. So the better you can explain to them, the more they'll know how to put it in lender terms, how to put it in there so that the bank can understand it. Right. Because to the banks, you're really just a black and white piece of paper. And if you don't check one of the boxes, this is our lenders included, our banks included. If you don't check one of the boxes, that's a decline. That's all that means. To them, they're moving on to the next one. Right. But who knows? It could be that you filled out something wrong. It could be that, your story was told the right way. Right. I see it happen all the time. Medical transportation, great industry to describe, right? Because if I say picture a doctor, you picture one thing. I tell you to picture a tow truck driver, you picture something totally different, right? Now, just imagine what you write on an application when it says industry. Do you write medical or do you write transportation? Right now, depending on what you write, your business is scored as that, right? If you're scored as transportation, it's going to be a lot different terms than giving a loan to a doctor or a dentist.
That's
right.
So
There's these little things that we can do to set you up for success because you're kind of on the fringe in two areas, or we are able to push you in the right direction for a specific product at a specific time. So just know that's what we're here to do. The process is extremely simple and streamlined. As little as 3 to 6 months of bank statements, an application is all that's going to be required. We're going to do a quick, what we call like discovery call, like it's a sales term, but basically it's a quick interview about how you got started in the business and what you're looking to do with the money. Because use of funds, we didn't talk about this, Terry. We could do another live.
We got like 3 more lives to do. Like
part 3 is use of funds. Use of funds is what gets you funding. It's not your business. It's not how much money you make. It's not how much money you can afford. Those things will get you approved and declined. But what's actually going to say, hey, we want to give money to this business is why you're borrowing it, right? If you're going to take $100,000 and go throw a Sweet 16, that's going to be a hell of a party, but it's also going to be a auto decline.
Right. That, y'all, I hope y'all didn't miss what Tony said right there. And this is one reason why I love working with them. So they have a conversation with you because sometimes y'all hear me say it all the time. Y'all, this is why I love working with someone because I want y'all to hear it from the lender. I say that sometimes y'all are being denied based on what you put on the application alone. You are in position like you have no idea. And one other thing of the earlier that was Lisa who had got funded. She applied for financing with Rok Financial, and initially she had gotten denied for something. They gave her some feedback. She came back 4 months later. Mind you, I'm sharing Lisa's story because Lisa shared it. She shared her testimonial and got approved for $255,000. So the nugget out there is that if you're trying to look, come on, somebody, right? If you're trying to get funding, you have the conversation. And if for any reason you're not able to get approved, have the conversation so you guys can work on that. But more importantly, sometimes you're saying that example, I love that example with transportation and medical, because sometimes when they can talk to you and say, Angela, what do you do? Regina, what do you do? Jenna, what do you do? Author, tell us about your business. Tell us about the use. Then when you're having that conversation with Rok, they're going to pull out of you what is the best way to package what you need to the lenders to get you approved. And sometimes that right there, you've been denied by 10 banks. Now you work with Rok Financial. They're able to package it based on that conversation the right way. And now you're able to get funding that you weren't able to get before. That's the difference, guys. Somebody being there as your ally to help you get in front of the lenders to get approved.
No, I mean, it's totally true, right? Like, I'm no artist. My wife is definitely the creative one. I'll tell you that much. But like, and I've never been an artist at all, right? So I'm not going to paint your picture, but like, you get what I'm saying with that. And what's most important is that it is presented the right way.
Presented the right way.
Some of these banks and lenders that are out there, like, and I'm not talking about the ones that are easy to get money from. I'm talking about like the ones that are tough to get money from because they have good terms, because they have the best rates, because they have the best product in commercial finance in whatever they do. It could be restaurants, it could be retail, it could be commercial, construction. It doesn't matter. But I'm just telling you, the ones that do the best deals, they have the strictest requirements. And one of the things that like a lot of people don't really totally understand is like a lot of them won't even look at your application again for like 60 or 90 days, right? So if they declined you on the upfront, you might not be able to go back to them for 2 or 3 months.
Come on.
And that could be the best option. So if you only got one shot at the best option, why not take the best shot, right?
Yes.
Give it your best shot, right? Don't half-ass it. Use your whole ass. That's.
I love it. And look, Angela said, look, locked in Rok Financial phone number for the future. Not quite ready yet, but close. And was this helpful for you guys? Like, I love that, guys. Get the information. But Tony, he just dropped another nugget, right? He just said a lot of times when you apply with these banks and if you get denied, they won't even let you reapply. That's why getting it right the first time is. I just had somebody reach out to me that had the situation happen where they got denied, and they're like, "Tara, I can't even reapply for 60 days."
Oh, the worst is when we do get somebody to apply with us. We go to the lender that we know is best for them, and somebody else took them there and did it the wrong way.
Yeah.
Right? That's the worst, right? Because it's like, oh man, you were so close. It doesn't have to be us that does it, right? Do I want to fund every business in America? Absolutely. It's why I show up every day. But no, the real reason I show up every day is because I grew up with a single mom. Me and my 2 brothers, we worked in any small business we could. And I'm telling you right now, the people that I saw that were successful, they were small business owners. It was the landscaper that was riding around on the mower. It was the oil burner repairman that was, still cranking the wrench. It was the auto repair guy that's under the lift, changing oil, right? They're not financially savvy. And if they are, it's savvy enough to run their business. It's not to leverage capital. Right. So when you need to leverage capital, leverage somebody with the information and allow them to help you out. It doesn't cost you anything. What I will say is it doesn't cost you anything. Are there closing costs? Yeah, there's closing costs. You're only going to pay in a success, though. It doesn't cost money to apply with Rok Financial. Right. It doesn't cost money for you to be on this live, and it doesn't cost money to apply with Rok. So there's no application fee. There's not, if you're talking about real estate, there might be like an appraisal or something like that. So I don't want to totally put.
We're going to do that on the next one. And so
we're going to live about that. But as far as you getting approved, there's no application fee, nothing like that.
Perfect, y'all. So he said, so to wrap it up, he said, guys, have the phone numbers are going across the screen, right? 631-319-0439. And when I repost this, guys, I will put a pinned comment and I'll put a link in the description for you guys to apply. What Tony said right there is there's no cost to actually just apply. Make sure you have your bank statement, guys. I just did a whole reel on Instagram and on YouTube, and I just got in all of y'all face. Yes, I did. Because I just literally, and just in transparent, if this was helpful for you guys, let us know if this was helpful. I just literally, you said, I learned about funding for equipment that I need. Excellent. You said, yes, this was very helpful. Thank you. I just spoke to, and I'm going to share this one last thing with you guys and the reason why we're actually doing this. And I thank you, Tony, so much for your time because it's late. You've been working all day, right? But I just spoke to him.
Really quick, not to interrupt you. I actually had to leave. My son is 5 years old and he's starting football, and I have to coach him because I can't watch somebody else coach my kid because I played and coached college football at one point. I'll talk about that at another time. So I literally left, went and coached practice, came back, made sure that we had the opportunity.
Oh, come on, somebody! Y'all, we gotta get this man home to get some dinner.
Yeah, I knew what it was though. I know what it is, and it's all good. I'll reheat it.
we appreciate it. No, thank you so much. And so one of the reasons why I really was talking about even the business bank statements, guys, I just spoke to a business owner. You guys know I do one-on-one coaching strategy sessions, right? When you guys want to speak to me one-on-one. And I just spoke to a business owner this week that had been in business for almost 10 years. 10 years, guys. And all of their transactions are being deposited into their personal checking account.
Oof.
You see how Tony just reacted, guys? I'm saying, y'all, I need y'all to lean in real quick, okay? Too many of us are not running our business like a business owner. We have to stop with the Cash App, stop with the Zelle, stop with the Venmo, stop get a business bank account. I just went off on my shorts and on Instagram and in my Patreon about not having a business bank account. Guys, what did Tony just say? 3 to 6 months of business bank statements. So some of you guys you have a cash flowing business, a plan, you have clients, you have customers, you got the logo, you got all this stuff going on, but the back end stuff is not right. Then you come to me and I could have made a phone call and gotten this person no less than $50,000 because I know what his revenue is, no less. But because he had his information going into his personal checking account, I can't provide the lender with business bank statements. So guys, we're doing this so you guys can be aware and be in position. If there's anything you need to fix it now.
100%. You're totally right, because right now they have a hobby, and despite how successful they are, you can accept payments through these financial means that have popped up, right? Like, that's all good. You just can't leave them in the Cash App and use a Cash App card as like the way that you're doing your business.
On.
Like, you can't do that. Like, that's not the real way to run a business. No, you have an operating account, maybe even a payroll account. You probably need a few accounts, if I'm being honest.
Look, that's a whole other lot. Listen, and or at least have it going into your business bank, like y'all.
At least a business
child
that has where your revenue goes in, because when you're a business lender, the difference is like, and this will be the last thing, I promise, and just know that, like, this is what makes us different than personal finance, right? Is business financing is technically like the wild west. You ever hear the CFPB? You know what that stands for? Consumer Finance Protection Bureau.
Yeah.
It doesn't stand for Entrepreneur Finance Protection Bureau. There's not one. In fact, that is like one of the reasons why commercial finance is the way that it is, because it's unregulated.
You better go. I say it all the time. I say it's not regulated, you guys. You don't have, come on.
No, it's not. It's not regulated, and that's a pro and a con, if you ask my opinion.
Yeah, that's true.
It's a pro and a con, because if it was regulated, bad players would weed themselves out, right? I get a bad rap a lot of times. They're like, "Oh, you're Tony from New York. What are you in collections? You guys breaking legs if they don't pay, right?" Like, trust me, I've heard it all, right?
Tony breaking legs.
You're not scaring me with none of that. I'm a big teddy bear, though. If I meet you, I'll tell you. That's about it. But no, the real thing is that, like, businesses and the way that they leverage financing, it's different than a business, than an individual, and they don't have the same protections. They're not the laws don't work the same. So when a business lender or a bank that lends money to businesses for business purpose, they have to do it through a business checking account. It's literally like the one thing that they have to have, right? There's one other like automatic thing that comes to mind, and this is totally out of left field, but like, no bank in America lends money to somebody that is behind on their child support. Right? Like, that's an auto decline, right? Like, it has nothing to do with business. That's obviously a personal thing, right? But like, one of the things that I can tell you is, like, those are just people that we can't help. If you don't have a business checking account, I can't help you. Even with equipment financing, when you are a startup, one of the requirements for you to actually get the equipment and for them to fund the equipment is that you show them that you've opened a business checking account, right?
Come on.
You don't need to have revenue in it yet, right? Like, again, I told you can get equipment financing as a startup, but you do have to, because they're going to pull their payments from that account, right? So they need to know that account's been set up and they're able to do so, right? And that's the reality of the situation is, we're playing ball on their court, I
love it.
That's the reality of the situation. So let's know all the rules. Right. And let's take advantage of the rules. Let's run, let's
come on. Thank you so much. I love it. And so, guys, and I have a on YouTube, I have a business playlist, but I have specific videos, specific courses, and in Patreon, I walk you through how to get a business bank account, how to incorporate your business, how to get it registered with the state, all the back end stuff. And one of the reasons why I do that, like, Terry, you're in credit. No, I'm in entrepreneurship and legacy building. And one of the best ways to build legacy and to build wealth is through owning a business, buying a business, real estate, in addition to your salary, having these other things. They always tell you, like, you look at the stat, it's like 70% of it's like the best way to build business, either to build wealth, is by either inheriting or starting a business. And I don't know how many of us are like really like inheriting like millions or having like a trust fund. Most of the people that are wealthy, if you look at how they did it, they built a business. There's like an actual stat. Y'all gonna make me go find the stats. I looked at it the other day.
No, you're totally right. And I like to think I'm like a lot of people out there.
Good.
I'm 33. I've lived in New York pretty much my whole life. It's not cheap to live on Long Island where I live, right? I know what it costs. I pay for it. I got a wife, I got kids, and I got no parents, right? Both of my parents have moved on. God rest their soul. But like, the one thing that I will say about that is I got left 2 won'ts, not wills. I got left two won'ts. My parents grew up in a time where it was tougher for them. Like I said, my mom and dad, they split up when I was super duper young. So like, I didn't really know my dad like that, but I can tell you both of them, they left, closer to a won't than a will, right? There was no millions for me. So I'm going to need to go get mine, and I got my number. I know what it is. And when I get there, you'll know it because I'll be retiring. But no, the idea is let's put a plan in place and let's implement it. Right. Terry,
I love it.
That part, like, she's going to teach you the steps that you need to do to get there. But like the first thing you need to do is set the goal, make it one that's not as conservative as you might have been in the past, right? Because it's 2025, man. If you ain't gonna go get it, somebody else is, right? And they're gonna do it on a TikTok, they're gonna do it in a YouTube, or they're gonna do it in some overnight success, and you're gonna be sitting there kicking the can down the road going, I should have did that, I should have invented that, it should have been my business, it should have been the thing that I talk about, right? Don't wait. The best thing you do is get started, subscribe to Terry's channel, join the Wealth Warriors. If you got a business up and running and you want some commercial finance, you know where to find us. But if not, get that business up and running. And in 6 months, I got your back, Jack. You know that.
I love it. Look, come on, Tony. So will this video be uploaded to your channel to rewatch? Yes, it will. And so good. So thank you so much, Tony, guys. So the numbers go, I will post the number. I will post the link for you guys to reach out to Tony, the Rok Financial directly. Look, Arthur said facts. We just appreciate your time. Look, he had a long day, y'all. Like we appreciate your time. We appreciate your honesty, and y'all, I will get him back on here so we can talk about some more of the financing and just dig deeper in this. Because I'll just be honest, I have almost 20 years. Well, I have over 20 years. I'm old. I'm 46. Rok, Tony. Like I'm way older. Like he has over a decade of experience. But you don't become an expert at business funding in one workshop. In 1 hour, we could talk all night long, right? And so our goal tonight was to make you aware, to give you options, to talk about fintech financing, to show you some examples, some real life examples, and to give you guys next steps to click the link or give them a phone call to talk about your situation. And if any reason you don't apply, understand what you don't qualify, you get the information about what you need, and then you reapply when you get everything right. So guys, thank you so much for everybody who is still on here. Hey, y'all. Hey, we love you. Make sure you join us on Patreon. And thank you so much for hanging out with us. And Tony, just thank you so much for your time. Thank you so much for just leading by example and just being super transparent with everybody. And I'll make sure I get you back on here again so we can have round 2.
Oh, absolutely. Absolutely. Anytime, Terry, that you want to do this, let me know. We're always down to rock out together. I love your energy. I love that we get to go back and forth about it. And I love that it's just a conversation. Like a lot of times you guys might think like we're spending a ton of time planning this out. Terry's super busy. You can't get her for more than 10 minutes. The last time I got her for more than 10 minutes was at the beginning of June, so this is the only other time is when we're live like this, just so you know. So we spent about 5 or 6 minutes before this. But that's about it, right? And this is organic content from people that do this every day with real businesses, making real differences, because we're out there doing it ourselves, right? And to me, I always viewed it as like, you can dig a hole 2 different ways. You can pick up a shovel and start doing it, or somebody else can come and tell you what you should do and the angle that the shovel should go in and whether you should need a square one or a round one. Nah, I'm not that type. I'm here to pick up a shovel and help you out. So
I love it.
I know Terry's the same way. Rock out with us, get part of her network, and let's do this thing.
Absolutely. And I forgot to tell you, Tony, they started calling us TNT. They were like TNT, so I forgot to tell you in Patreon. They were like, TNT was on tonight. I love it. Look, wisdom and wealth moves with TNT. Love y'all. All right, y'all. So have a great night, guys. Rewatch this everybody needs to rewatch this, take notes, and share it with somebody you want to see win. Tony, have a great night, and thank you so much for your time.
Thank you. We'll see you soon. Thanks.
Bye, everybody.